Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, thanks for having me. Very interesting couple weeks, to say the least. And today the Dow, as we're speaking, is going into the close, selling off. And of course, we've seen Facebook sell off over the past week too.
What is it? Down 7-9%, something like that?
Yeah, it is, and I think it's a very important stock. First of all, a couple months ago, of course, well, not even that long ago, the beginning of January, we saw the Dow have basically a 10% drop, and then it rebounded fairly weakly. However, the NASDAQ made a new high, and then it stalled out. But that new high was led by many of the fad tech stocks, such as Amazon, Google, Netflix, Activision, Nvidia, that have been, big leaders of the past couple of years. People kind of forgot about them when the Dow was going straight up in January. But on the recent rebound, they were basically the only thing really going up strong. If you looked inside the Dow, in fact, most Dow stocks were broken on the drop and just don't look that good. For instance, McDonald's broke on earnings, Walmart broke down, on and on and on. But Apple, Cisco, Verizon were the best looking ones, but Apple and Cisco are big tech stocks. And now, what happened was they looked like, as a whole, that they exhausted themselves. Just if you looked at them and only them, you would think, oh, they're just going to pause or pull back. But them doing that is enough, apparently, to weaken the entire stock market. And I think Facebook is a very important stock because it's been these stocks, especially Facebook, they have seemed to have been invincible year after year. They just go up and up and up without ever dropping. And now this decline that we've seen in Facebook, it's basically has a broken chart pattern. It's fallen below the 200-day moving average, the 150-day moving average, and the 50. And the future of it, at least the earnings growth prospects, are going to have to be downgraded from where they were 6 months ago because of all the controversy surrounding what's going on with it.
Is this an opportunity for somebody to buy a stock while it's down?
Well, I really wouldn't do that with Facebook because I think the situation with it is going to go on for months. The reason why is, first of all, it's more than just the headline that this Cambridge Analytica, got all these people's data and it's embarrassing to Facebook and Facebook's not responding in a way that's appeasing to people yet. I think there's a big problems. And what they are specifically is Facebook, and it's only been a couple of days since I've realized why they're doing this, but over the past couple months, Facebook has been resisting making dramatic changes with the way it allows people to advertise. And I advertise on there, and also advertise on Google. And what Facebook basically does is allow anyone to press a button and run a Google ad. You can have a Facebook page and just press a button and boom, you're running an ad as long as you give them a credit card. Google requires you to confirm your identity, to have a website that has contact information, and also they demand that you obey the laws of the state or the country that you're advertising in. And I'll get to why that's important in a second, but Facebook has been less stringent with its advertisers, and what's happened is, obviously they let these shady people from around the world run any old political ad they wanted to, which if you ran ads on TV or in a newspaper or on Google, you wouldn't be able to do that. If you're running political ads in the United States, you gotta disclose, hey, I'm being paid by whoever to run this ad, and so forth. With Facebook, that's not a requirement. So they just have simply less stringent advertising requirements. As a result, they've been scared, because of all negative publicity, of coming under regulation. And what I didn't really understand is what is going on here, because they made changes to their news feed earlier this year to try to downgrade the amount of times that you see news on the website. And they were doing that as a way to appease or prevent future regulation of their company. And I thought, well, this is really kind of crazy, because an impact on that was apparently third parties have said that there's a 20% drop in the amount of time people are actually spending on Facebook, because the people that like seeing news, and I'm one of them, are now finding the site to be less useful. So, and when Facebook even announced they're making these changes, they said this is going to hurt our earnings. So I was kind of scratching my head, like, why are they hurting their earnings? Why can't they do something else? And what I'm starting to realize is that what has happened with Facebook is they own a large, they're so gigantic that they own like 40% of advertising on the internet. Google also is the big giant. But I advertise at Google. They're much more stringent, and I think what Facebook has done is allowed itself to become a place where shady people can advertise along with legitimate people, and they don't want to lose that business. And I guess they fear losing that business more than they would simply straighten their act up. I mean, if Facebook would just tomorrow come out and say, look, we made mistakes, we're going to adapt the same sort of stringent requirements that American television stations do, or newspapers, or just regular media does, or even Google, all the problems would just vanish overnight that are happening. But I think they refuse to do that because they're a cesspool for shady people that really shouldn't be online advertising. So I think if they reform themselves, they're going to lose their earnings. Their earnings growth is going to slow down. If they don't reform themselves, they're going to come under lawsuits, regulations, and so forth. So I just think this company is not going bankrupt. I don't even know if people are going to get off of Facebook in a meaningful way or abandon it. But I think the future of its earnings growth is in question now, and it's been one of the most, top gaining stocks in the market over the years, one of the most widely owned stocks in the market too. Even people who are bears on the hedge fund, bears on the market would own it, in their hedge funds and so forth, because it's just a leadership stock, or was, and that's over with. And to me, what's really important is, from the standpoint of the financial markets themselves, I think, to me, it reminds me of Cisco in the 1999 and 2000, because it was the big leadership stock that seemed to be invincible. And when it broke down, it became obvious that things were changing. Now, that's not obvious yet, but if other big cap stocks break down in the coming weeks or the next couple months, like Facebook has done, say Google breaks down on the charts, goes below the 200-day moving averages, it drops 10%, or Tesla, or Amazon, and they fall like Walmart's fallen. So a lot of the Dow stocks have broken down, but these fad stocks have not. So if they do, that's a sign we're going into a bear market, in my opinion.
We'll have more with Mike Swanson right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're chatting with Mike Swanson. Mike, what's going on with Bitcoin and the other cyber currencies right now? Or cryptocurrencies?
Well, I think they're just dying out, frankly. We saw a massive run, of course, in December, and along with that, mania all around the world to open up accounts to trade it. And the number of people typing in Bitcoin on the search engines exploded. And so did the trading volume, the amount of transactions done every single day. But this year, if you look at those statistics, the daily transactions of Bitcoin is back where it was before last October. The number of times it's being typed in the internet's back below it was in October. So I think it was just a fad that came and is now fading away. And in the charts, the best historical comparison is what silver did. In 1980, silver had a manic rise in 1980 when the Hunt brothers tried to corner it. It went straight up in like a month and then went straight down from where it came from, which is exactly what Bitcoin has done. But then silver, for the rest of 1980, did nothing. It just kind of traded in a small range and to slightly down. And I think that's really what Bitcoin is now doing. It's just going to trade, say, below 11,000, perhaps below 10,000 for the rest of this year, and probably go below 5,000 before the year's over, but just slowly trend down. And I think as time goes on, people are going to forget about it, and less interest is going to simply be in it. And the other cryptocurrencies are even worse. So there were 1,300 of these coins that appeared last year, and most of them have all crashed. All of them really have all crashed, and in even worse ways than Bitcoin has done. And one last note on that is Ethereum was a coin that was holding up after the Bitcoin top in December. Ethereum barely pulled back in January, and now over the past 2 weeks, it's also collapsed. So there's real, I just think it's over and dying. I mean, I'm sure there's Bitcoin companies out there that maybe they can make money mining the coins and stuff, but, to me, I was someone that actually was saying that some of these Bitcoin blockchain stocks could be good plays back in October, but I never thought that there was something to invest in or to hold, that it was just a fad, sort of like the internet stocks in 1999. I just think that game's all over, and we gotta, I personally don't even care what they do anymore.
Well, a lot of people said, are these the new tulips? Thinking about the 1600s where, one tulip would trade for hundreds of British pounds. And then, of course, that whole market collapsed and people were left with nothing. Will Bitcoin and other cryptos end up to be nothing but tulips?
I think so. I mean, back in December, people that were saying that were comparing the Bitcoin chart to the silver chart I mentioned, and then also the tulip chart. and that's exactly what happened, the tulip mania chart. And there's other comparisons too, the South Sea bubble around, I can't remember the exact year that was, but very similar chart. And, I think so. And one argument that even some of the people that believe cryptocurrencies are the future, even they will say that, well, maybe it'll be a different cryptocurrency, or they'll say, well, Bitcoin's the one I believe in, but all the others will vanish. And to me, I don't understand why one is better than the other. at all. So I'm highly skeptical, and I just assume own things that have an asset that is out there. Gold mining stocks, even if they don't mine gold, they at least are drilling on a property that has potential. And with these coins, there's no real potential for anything. They don't own anything. They're just virtual currencies. Now, the argument that the Bitcoin or crypto people would give, and still do, is that, there's a limited supply of coins. There's a limited supply of Bitcoin because you can only make so much of it, or it's so hard to make it that it's being made so slowly, that it's different than gold, different than the dollar. And what I think we have discovered is that whole idea that there's a limited supply of virtual currencies has turned into a fiction, because what has happened is people were creating new coins every single week. So if you just forget about Bitcoin, there's 1,300 other coins, and really there's no reason there might not be another 1,300. It doesn't matter if they crash or do whatever. It's just virtual currencies. It'd be like me saying I'm going to start selling 100 pieces of paper that say currency on them. So what? But these Bitcoin or virtual currency people talk people into believing that there's value in there. And to me, I don't remember who said it, but one of the big maybe financial people out there that's hedge fund guys, billionaire people, said that the cryptocurrencies are really collectibles like baseball cards or Beanie Babies. And I think in the end, that's really what it is.
We'll have more with Mike Swanson right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Mike Swanson. Mike, what's going on in the marijuana space right now?
Well, marijuana is funny because I don't, I'm not saying it's anything like Bitcoin, but it's a speculative sector in the markets because most of the marijuana stocks are, over-the-counter stocks, penny stocks, so to speak. And it's been a sector that gets hot, from time to time over the past couple of years. And really, going into the end of last year, there was a huge mania, basically, in blockchain Bitcoin stocks. And I really think that's over, that those stocks are done. So if the stock market holds up over the summer, and I don't think it's going to crash, and, if the Dow broke the 200-day moving average here, fell a little more, and then rebounded in April, May, June, we could see more, another sector run up or more a speculative thing happen. And my thinking is if we see a speculative run in something, it's not going to be Bitcoin coming back. It'll probably be the weed stocks, the marijuana stocks, because Canada is going to change the laws on that to make it easier for these companies to grow marijuana and sell it. So I think there is potential there in a lot of these stocks. And if I was someone that had invested in the Bitcoin and blockchain stuff and still own it, I would frankly sell, take my losses so I can use it on my taxes, and move that money into the marijuana stocks. If I wanted to say I want to allocate into a speculative sector that has potential like that. So that's my view on them. I'm very, interested to see, I think the stock market's going to pull back a little bit more here. I'm interested to see, how can they do while that happens.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests, like Mike, can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.